Inflation data is now out. The CPI number came in at 5.3%, and the core inflation, if you take out food and energy, came in at 4%. Now, if we go ahead and we look at this, we have so many charts. The Best Business Show research team, we were hard at work all morning long finding all of these charts. So first, let's start with the CPI Urban Consumer Index. What this essentially is showing is people within cities. Here is the CPI. It's real high. There's tons of people who are celebrating the fact that it's 5.3%. Now, if you are a genius like us, you can easily see that we are still at incredibly elevated levels. This chart goes all the way back to 2015, and you can see in 16, 17, 18, and 19, we were hovering around plus or minus 2%. That is the Fed's target, 2%. They were doing somewhat of a good job keeping it around 2%. But then all of a sudden in 2020, we had this massive dip because of the COVID pandemic and the economic carnage that ensued because of the unconstitutional government mandated lockdowns. And what we had to do was use monetary and fiscal tools to drive liquidity into the market. And boy, did we drive. We drove liquidity into the market so well that in 2021, we now have over 5% inflation, the CPI metric. Now, as many of you know, there is a term that keeps getting thrown out there called transitory. And that term, transitory, is a classic intellectual sleight of hand. And what do I mean by that? If you look up the definition of transitory, there is two words that make up the definition of transitory: not permanent. That's it. There are no quantifiable metrics around the term transitory. It is just not permanent. And so begs the question is, how high can inflation be and for how long until we can negate the fact that it's transitory? If inflation stays at 5% for a year, does that mean that inflation was transitory or not? What if it stays at sustained levels at over 3% for 3 or 4 years? Does that mean it was transitory or not? What happens if we have 2.5%, 3%, 4% inflation for 5, 6, 7 years? Is that transitory? Nobody knows. It's a term that means nothing. It's literally just a magical word that can be twisted to support any narrative that those in charge want to make it. And so as long as you continue to say it's transitory, it's transitory. It's like promising a better future. I promise it's going to go down. But the beauty of the word transitory for those in charge is also that as long as you are measuring inflation simply by the rate of change and not looking at the actual aggregate inflation, you know that it can't go up forever. You're not going to get compounded inflation of 5% this year. The next year it's 7%. The year after that it's 10%, because that would mean that it was actually accelerating and compounding at a very, very aggressive rate. Instead, what is a better measurement is if prices are being increased right now, the cost of goods and services going up, they're not going to lower those prices in the future. There is nothing transitory about the price increases. They are here to stay. And likely we will continue to see price increases in the future. So the fact that we focus on the rate of change rather than the aggregate change is one sleight of hand. And then the term transitory, of course, the magical word that everyone likes to point to, transitory, is simply something that cannot be measured. It cannot be negated. It cannot be proven not to be true. And so as long as we continue to use the word transitory, it's a way for those in charge to hide the fact that inflation is here and inflation is ravaging the bottom 45% of the population. So the next chart that we have is the core inflation in the urban metropolitan areas. And when you look at this CPI urban consumers taking out food and energy, which of course food and energy, those must not be very big parts of your expenses, we see it's at 4%. Again, same exact story. 2016, 17, 18, 19, there was around 2%. But then all of a sudden we exploded upwards in 2021 and we're still sitting around 4%. And people are celebrating the fact that we have this little dip here. But as you can see, we had a little dip earlier in 2021 as well. And then we exploded upwards. And so what we are seeing is still about double the metric of core inflation. It's usually around 2%. We're at 4%. I don't know why we're celebrating. It's twice as bad as it normally is. Not good. So where exactly is all of the inflation coming from? We've got this table here that we outsourced to Zero Hedge. Thank you guys so much. We appreciate the partnership that we have. And what they showed here is this is actually each component of inflation broken down. You can see here in August what gained and what lost. So if we go down and we look at the things that lost, that 2.1% is fuel. is down 2.1% in August, month over month growth. And then you can see used cars and trucks are down 1.5%. You can see that medical care costs are down 0.2%. And then transportation services are down 2% as well in August. But if you look at the unadjusted 12 months ending in August, we still have absolutely insane numbers. Energy in total is up 25% year over year. If you look at things like energy commodities, up 41%. If you look at gasoline, up 42%. And fuel oil is up 33%. Energy is off the chain. If you then go and you look at things like utilities, gas services, they're up 21%. Absolutely bonkers. And then of course, if you go ahead and you look at the used cars and trucks, we are still up 31, almost 32% year over year. Now that is insane. But those are the big kind of headline numbers. Those are the video game numbers, as I like to call them. If we go ahead and we simply look at other data points, like let's, start with all items, up 5.3. That's still a really, really big number. 5.3% is insane from an inflation standpoint. Food is up 3.7%. If inflation is supposed to be 2% and food is up 3.7, food is up almost twice as much in price as the Fed rate target. Then if we look at food at home, we're not even talking about grocery store stuff. This is food at home, up 3%. If you look at food away from home is up 4.7%. So literally, whether you're eating out or you are eating in, you're paying more money. As we know, those at the bottom of the population, they have food as an outsized portion of their monthly expenses. And so when you increase prices 3, 4, almost 5%, whether they're eating at home or out at a restaurant, it is incredibly painful for those families. If you then look at energy services, including electricity and utility gas, that's up 8.6%. 8.6% energy. One of the big costs that people pay on a monthly basis. And then when you start to even go into commodities without including food or energy, you can see that just traditional commodities up 7%, new vehicles up 7.6%, apparel is up 4%. How in the hell are somebody supposed to live in this country? They work an hourly job, they don't get a pay raise, and food is up 3.7%, clothing's up 4.2%, their electricity bill's up 5%. Everything is just going up and to the right, and there is no end in sight. Shelter, one of my favorite ones, is up 2.8%. And if you look at transportation services, up 4%. So literally everything that you spend money on, for the most part, is up. And so, of course, if everything is going up, you're going to be in a worse financial position if you live paycheck to paycheck and you save in cash. Now, why are some of the things in August, right? There is some good data points in here, but why is some of it going down in August? Well, according to Dr. Julia Coronado, the Delta variant was a very big part of the story. If you look at everything from lodging away from home, meaning if you're traveling, or airline fare, everything was down in August. You can see there on the far right, it's all dipping. Why? The narrative around the Delta variant, which, by the way, all of the COVID data, I don't want to get too deep into it, but I recently read on the CDC website, they don't actually test if it's the Delta variant or a different variant. It's just the COVID or not COVID. The Delta variant narrative took over in the mainstream press, and that caused less and less people to travel. So if less people are traveling because they fear Delta, then what ends up happening is, of course, airfares are down and also lodging away from home is down. So you get what appears to be a slowdown. But instead, is it a slowdown because the economy is actually improving, or is it more concerns around the health crisis? You decide. Next up, we have Liz Young, who I believe is the head of investment strategy at SoFi. She's from SoFi. She's an excellent follow on Twitter. Highly suggest you follow her. She had this tweet this morning that said CPI, ex food and energy, core inflation, month over month is back down to pre-crisis levels. The used cars are down 1.5, car and truck rentals down 8.5, and airfare down 9%, contributing to the slowdown. Some of this is a pause from Delta, but a cooling in multiple spots. And so again, there is a belief that some of this is a periodic pause because people were fearing that Delta variant. And if all of a sudden those fears go away, all the activity comes back and we'll be right back ripping and roaring with that inflation. Now, used cars and trucks, if we go ahead and we take a look at this is like a video game. I mean, just literally, how high can we go? Doesn't matter if there's a little slight drawback, we can still explode higher, as we did after that kind of September to February drawdown in the prices. And then bam, we just exploded. In March, used car salesmen were getting rich and you weren't. That's what was happening. Used car salesmen, literally, they don't have enough demand. They can't keep cars on the lot because they are absolutely printing cash. If you got a used car dealership, shout out to you because you are getting rich at the expense of everybody else. If you go ahead and you look at the used car prices month over month, you can see that back in February was that last big negative drawdown where we had a minus 0.9%. Then since then, we have just seen month after month after month of positive growth, including 2 10-baggers in there. That's right. April was a 10% month over month growth in the price. June also saw more than 10% growth month over month of used car prices. August, we went back and we had a little bit of relief. Again, we can celebrate the relief of minus 1.5% in used cars, but it doesn't matter. The price is still so insanely high compared to where it was pre-pandemic. And so Peter Schiff, who's coming on the show in a little bit to talk about all of this inflation data, had a great tweet this morning. He said for the first time in 9 months, CPI rose less than expected. But the 0.3% growth in August still annualizes to almost 4%. The actual year over year rise is 5.3%. And the annualized year to date jump is 6.3%. Ridiculously low owner's equivalent rent continues to mask a far larger inflation problem. So when you start to think about this, you can look at the relative growth or contraction from July to August. And there are reasons why some people are celebrating in certain parts of the economy. But at the same time, it does not change the fact that we still have over 5% CPI. We have 4% core inflation. And if you start to annualize some of the numbers we're seeing in August, it is still very, very nasty. And so if you go ahead and you look, Neil Irwin here has got this consumer price inflation all in one chart. And it's worth noting that the plus 0.3% per month, if sustained for a year, works out to 3.7% annual inflation, well above the Fed target, even adjusting for CPI versus PCE differences. And so again, this chart is showing that yes, the months between April and June were real crazy, but we still are pretty crazy today. And so it's easy to look backwards in the rearview mirror and say, well, at least it's not as crazy as in April or in May or in June. But that doesn't mean that we're still in a good situation. And so if we go and we look at Jens Nordvig, who said that he likes to look at the inflation data in a median sense because there's so many outliers. So can you basically take the center of the distribution across all 82 categories and equally weight them? He thinks that this gives you a much better idea of the month over month inflation growth. And so if you can see this here, we're not going lower. If you actually take that median weighted distribution, inflation is just as high as it's been throughout this entire thing. And so what we are watching is, and this specific chart is a great example, that the data can be manipulated however you want. You can make the data say whatever you want. And so all he did was he took the exact same data points and he calculated it differently. And he shows actually inflation is just as high as it was last month. There's been no change. But if you calculate it a different way, if you manipulate it, if you start to take things out like food and energy, you can make it say whatever you want. But that doesn't change the fact that prices are much higher, and those that have increased their prices are not going to lower them. And last but not least, for those that are holding cash, those people who haven't been listening, the people who haven't gotten the education, the purchasing power of the US dollar is at an all-time low. That's correct. World record low. Dollar purchasing power. As you can see here, going all the way back to 1913, we continue to see the erosion of the purchasing power of the US dollar. At the bottom there, you can see all sorts of different items. What $1 buys you. It used to buy you, let's see, $20, 20 bottles of Coca-Cola in 1944. $1 would buy you that. Today, $1 is one McDonald's coffee in 2020. $1 used to buy you 30 Hershey's chocolate bars in 1913. If you think about that for a second. $1 used to buy you 30 Hershey's chocolate bars. Then in 1929, they bought you 10 rolls of toilet paper for $1. 10 rolls of toilet paper, $1, 1929. If you go ahead and you look, Joe loves pretzels. 10 bags of pretzels in 1953. $1, 10 bags of pretzels. You then go to 1971. You used to be able to buy 17 oranges for $1 single dollar. Pretty damn cool. In 1997, you could buy 4 grapefruits. In 2008, you could buy 2 lemons. And today you can get 1 McDonald's coffee, small of course, because they're not going to sell you the big one for only $1. What's up, guys? Bang, bang. It's your boy Pomp. Thanks so much for watching the Best Business Show. Our goal is to make this the largest, most actionable business show in the world. And to do that, we need your help. We've partnered with SoFi as our exclusive sponsor because they have a piece of software that we think will help you take the information that we share on a daily basis and make it actionable. We want every single person to pursue and achieve financial security and financial freedom. In order to do that, you gotta act. And SoFi allows you to do it. So you can go to SoFi.com/pomp today. You can open up an account. And when you open up an account, you can invest in all sorts of different types of assets. ETFs, individual stocks, IPOs, Bitcoin, cryptocurrencies. They even have an automated investing function. If you want to invest, SoFi can help you. They've got a couple of different offers that you can benefit from. The first, open an invest account and they'll give you up to $1,000 for free. Kind of a no-brainer. Second is if you go on and you buy one of the cryptocurrencies that they offer, they'll go ahead and they'll give you $10 of Bitcoin for free. And third, some of you are saying, I already have a brokerage account. I already have an account somewhere else. Right now, you can get up to $5,000 for transferring your account. That's right. SoFi doesn't care where your current account is, but if you transfer it from that place to SoFi, they'll pay you up to $5,000 for doing it. Why wouldn't you do it? It's up to $5,000 for free. Head on over to SoFi.com/pomp today to get started. And come back tomorrow and watch more of the Best Business Show. Together, we're going to build the biggest show in the world.